All right, we are live. Hey, everybody, welcome back to this episode of Think Business Live. Looking forward to sitting down with Kevin Bupp, CEO of Sunrise Capital Investors. They are real estate investment principals, and he is also host of the Real Estate Investing for Cashflow podcast. Kevin, how you doing, man?
John, I'm doing great, but thanks for having me.
Yeah, no, I appreciate you being on the show. I want to start off and talk about your podcast because you've got a great podcast. You got a great setup. I love just the bookshelves, the sign. I mean, it's just, let's just talk about the importance of a podcast for a minute. And, I think, right now we're sitting here, I keep on forgetting what day it is. What is it? September 4th or September 3rd?
Yeah.
September 3rd. We're 6 months into COVID. To me, there's no better way to push out content than a podcast. So talk about just the importance of podcasting and the importance of educating your clientele, your investors, the people that, really follow you.
Yeah, no, absolutely. And I think I'll simply state it as, we're all placed on this God-given earth to help each other, in one form or another. And I think that, a podcast is just one of many different mediums that we can utilize, a vehicle that we can utilize to do that. And so that's why I started it. I was an early adopter of listening to podcasts. I mean, literally, more than a decade ago, when a lot of folks didn't even know what a podcast was. And what I found is that there weren't many podcasts related to the exact specific topics that I was seeking information on. And ultimately, I was a really bad writer. I'd played around with the idea of starting a blog like 7-8 years ago, and I'm just a horrific writer, and that never took off. And so I determined that I would go ahead and create the show that I wanted to listen to myself. And that's essentially what we have here today with the Real Estate Investing for Cashflow podcast. And then, as you know, John, I also started a second podcast as well. But, it's to answer like more specifically your question of like the importance of it, helping folks, right? I mean, there's tens of thousands of folks that we've been able to reach, actually millions of folks that we've been able to reach now over the years with the show, and have had an impact on their lives or their business one way or another, hopefully all positive. In return for that, which is not the reason why we started it, it's really helped fuel the growth of our business. I never started with that intention, but it's ultimately turned into that. And we've gained a lot of various benefits in the growth of our business over these last couple of years as a direct result of the podcast. So it's been huge.
Yeah. And I feel the same way. I did it because I loved it. I thought it'd be good to grow my brand. And then, I love it. To me, it's selfishly like a mini master's class that just happens to also grow my business. A mini master's class for me, and then I get to share it with the world, and it's great. But I want to chat with you about a couple of things that you just said. Just a quick comment. I think many people think they're a bad writer, but in my opinion, there's no such thing as a bad writer as long as you have a great editor. That's that's the key. I write things in I think it sounds like a Pulitzer Prize winner, and then my editor gets it, and I think, oh, that's what I thought it sounded like. So I just want to comment on that. But I want to dive into something because I think a lot of times people will say, well, podcasts are, there's so many podcasts, why should I start? And you made a comment, which I love, which is, I wanted a podcast that I wanted to listen to myself that wasn't out there. And it's so, today I think people are looking for such niche things in real time. They want to hear something that's real. Podcast has really affected my Audible listening, my audible.com listening, because I find myself listening to way more podcasts than I do books. It's actually harder for me to get through a book on tape, even though I do a lot, because podcasts are so much more real time and relevant.
Yes. Yeah. I agree with you. Now, I want to make sure I emphasize that, or at least hit on the kind of the point or question that you asked as far as like, should I start a podcast? There's so many of them out there now. Like that is the truth. I mean, you definitely, you got to jump on things. And I didn't think of it that way 6.5 years ago. I was starting because it wasn't out there. And for me at that point, it was equal amount selfish as it was wanting to help folks. And so selfish in the matter that if all I got from the show was the ability to interview some really cool people that I wouldn't have had the time to be with. And then, with that interview, we were able to share that information with the world and help folks. And so it's kind of a dual purpose. And it's turned into more than that. But as far as, should I start one because there's so many out there already?
I just want to comment on that real quick. I met you because I was on a podcast that I then had that person on a podcast, and then they introduced me to you, and now you're on my podcast. I mean, the
There
world
you
of
go.
podcasting is how I met you. Yeah.
Yes, absolutely. That's a great point. It's and what I like to say is, I was the first commercial real estate investing show. I can hold that claim to fame. And now there's probably a few dozen of them. I don't know. Like, I mean, some of them don't even show up in the directory, right? Like they're just buried. But there's a lot of them out there. And what I have found over time is that, even though you might, have similar content that you're sharing with the world, everyone resonates with someone, with one person versus another. And so like I might be sharing the same exact info that 10 other podcasts are sharing. However, my particular listener prefers my voice, prefers my personality. They can feel like I align with them and their life much more than the other 9. And so it's kind of like, think about like radio talk show hosts or news channels. I mean, go on XM radio and gosh, there's probably at least 20 news channels that literally, one form or another, are sharing the same information. Most of you guys have your pre-program set to 1 or 2 of them, right? You forget about the other 18 that are there. It's kind of the same thing with podcasts.
Yeah. Well, it's like, you can have 2 people saying exactly the same thing, but they bring their own energy, their own lessons, their own stories, their own frequency, their own vibration. It's like anything. I mean, I remember, in all my careers, I've always felt I can give my business plan to anybody because it's my DNA, it's my frequency.
That's right.
Nobody can duplicate it. And so it didn't matter to me. So let's talk about investing today. I know, as we sit here today, the Dow was up, the Dow was down. I mean, it's so volatile. And investing today, I think with everything with COVID, I think sometimes it's very difficult for people to dissect what to invest in, what a return, is today versus what the pro forma is going to be tomorrow. Yeah. So, and so let's talk about that for a little bit. How do you know what to invest in today when we don't know what the next, let's just say 6 to 12 months looks like?
Yeah, that's a great question, and I'll just give the disclaimer that I do not have the crystal ball, and so I can share my own opinions, and also
legal disclaimer: all advice here is just opinion based on this moment. Right.
And then, another disclaimer just for me personally is that we're real estate guys. I'm a real estate guy. And so not that I don't, dabble personally in the stock market, but I am first and foremost a real estate guy. It's what I've done my entire life. And so when I say the word investing, just go ahead and just consider that it's real estate investing. We're investing in some type of real estate. And on the flip side of that, I'm a cash flow real estate investor. So I want to buy an asset I'm going to put equity into, but ultimately it's going to create a reoccurring steady stream of cash flow from a tenant, typically from a tenant that's either renting a house, renting an apartment, renting a mobile home, an office, a retail center, what have you. But there's a reoccurring source of revenue coming from that investment. And so, COVID's created some chaos.
Can I comment on that for one?
Yeah.
I think a lot of people right now, the people that I'm talking to, are looking at the stock market. And they're saying, you know what, there's so many ups and downs. There's more diversity happening right now. So those types of people are looking at pieces of commercial real estate that are, where they can diversify their portfolio. And so I'm glad, I knew we were going to be talking about this, but I just kind of want to get everybody who's listening to this kind of zooming out, maybe out of their, normal way of thinking as far as just diversification.
Yeah, no, great. And as far as investing, it's a weird time. I'll leave it at that. It's been more chaotic in some asset classes than in others, and so we're in the residential housing space. We own manufactured housing communities across the country, and so we provide affordable housing to deserving families. That's kind of our niche. And that space, our space, as well as apartment complexes and, just generally speaking, residential landlords for the most part of the country has done quite well with the stimulus that has been, put out. Even folks that are out of work are able to pay their rent for the most part. We've seen downticks, but nothing severe. However, you take to the other flip side of the spectrum in commercial real estate, you look at hospitality, it's getting its teeth kicked in. Some areas are coming back, tourism driven areas are coming back a little bit. People are going to beaches because they've been so clammed up for the past 6 months that they're traveling now. But generally speaking, hospitality is it's got a long way to go before it recovers. Retail, I think really the downfall of retail was just accelerated due to COVID, and so retail is just taking a bloodbath right now. And then you've got factors that are causing negative effects on office space, right? I mean, a lot of companies are, almost all companies are allowing their employees to work from home. They found that they're as productive, if not more productive, working from home, and they're starting to decide whether or not they want to renew that office lease, or if they can't even afford it today, they might be defaulting on that office lease space. In fact, I saw the interesting thing on that, John, Pinterest. Their headquarters was in San Francisco in a iconic building, and I don't know the square footage that they took up, but I do know that they had $90 million remaining on a lease, and I don't know how much space that is or over what duration, but they literally paid a $90 million penalty for breaking their lease early. That just happened literally last week. That's scary. I don't want to invest in office right now, and so I like to think that everyone needs a roof over their head, and there's many folks in this country, in fact, more than not, that need an affordable roof over their head. And so investing for me, real estate investing, that gives me comfort knowing that what we're buying, where we're placing our capital, is that everyone needs it. Not everyone needs a retail shopping center. Not everyone necessarily needs an office space. Not everyone necessarily needs a hotel, but everyone does need a roof over their own personal head. Right. So I think that of all the bets out there in commercial real estate, I would say residential commercial real estate investing, apartments or manufactured housing, or a variation of one of those two, is probably the safest bet for your money.
Yeah, well, at least you can forecast and project out based on a lot of the reasons you're talking about. Mm-hmm. You're talking about office. Just a quick note: Ford Motor Company. There was just an article in the Wall Street Journal on August 26. Ford. I'm going to read the title. Ford rethinks the office, betting that work will be partly remote longer term. Number 2, U.S. automaker asks 30,000 employees to clear out their desks to make way for workplace revamp. So they're thinking very long term as far as, that this is just going to change the complete, landscape of everything. Another article, I could go article after article about a lot of these. And I hear you on the office sector. And, there's an article that I read, a bunch of studies pre-COVID, that talked about that 85% of the jobs that exist in the year 2030 don't exist today. And, to me, COVID accelerated a lot of that.
Yeah.
What we found is that I think a lot of people found that, they were shopping, Instacart and Amazon and using PayPal to pay for everything, for 2 months when everyone was on lockdown, and it was pretty efficient.
Yeah.
And so I'm curious to see what happens with retail. I think hospitality will, once COVID goes away and once there's a vaccine, I think people are so hungry to vacation. It's going to be like, it's going to ramp up relatively quickly.
Yeah, I agree with you, and I want to layer a point in there, and I think that any type of retail, prime located retail. Like if you're on Main and Main Street, if you have the retail shopping center and everything else is dying around you, if you got Main and Main, you got the prime location, there's always going to be a use for that location. Maybe not even its current use. Maybe there's another higher and better use. But if you've got the prime real estate, then there will always be demand for that product. And I feel the same way even about office. Like even, let's say that in downtown San Francisco, let's say that Google and Facebook and Pinterest and all these folks determine that they're only going to utilize 20% of their office space moving forward. And so that's that's hundreds of thousands, if not millions of thousands of square feet of probably office space in downtown San Francisco. However, we do know that San Francisco has had a massive shortage of available residential housing, and it's so dense already, there's nowhere else to go. And so maybe it lends to conversions on these office buildings into residential units, which has been done many times in the past in larger cities like New York and Chicago and what have you. And so I think that opportunities will come about as a result of this. And, you spoke to hospitality. I agree. Business travel will come back slowly but surely. Travel as far as taking vacations is already coming back. And, I think the big operators that have a lot of liquidity will surely be able to hold on and weather the storm a lot better. But the medium and small size operators, they're the ones that they didn't plan on 6 to 8 months worth of reserves. And then, maybe even another 6 to 12 months of 50%, performance based on year prior. So those are the ones that I think there's going to be some major defaults. In fact, I looked at the CMBS market, I think it was about a week ago. And as of a week ago, there was $20 billion of CMBS defaults, most of them the majority tied to retail and hospitality. So that's pretty scary.
Yeah. Well, you look at, even companies like Neiman Marcus and these huge malls, are in May of this year filed bankruptcy. You have, and I may be getting some of the numbers wrong, but 200 to 300 Starbucks closing, 800 Dunkin' Donuts closing. I mean, and that's just, those are today's numbers. And so it's interesting to see, but affordable housing, manufactured housing. I want to talk about something you said, affordable housing to deserving families. I just want to talk about the importance of of a mission statement. It sounds, that's a beautifully laid out, tagline, mission statement. I'm not sure exactly where it kind of falls into your business under what kind of title, but I think that's so important right now today for companies to, for the heart of the company to shine through in everything that they're doing. And so talk a little bit about, about your mission.
Yeah, no, and that's what it is. I mean, we provide clean, safe, and affordable housing to deserving families. And so, I mean, that is it. I mean, that's what we do. That's our core competency. That's our business model. That's what we live and breathe every day. And our vehicle just happens to be manufactured housing, which we believe in wholeheartedly. And so, even more so now, it's interesting as, it's a niche that has been in significant demand, even more so over the last couple of years. It's kind of was always under the radar. Now it's not, and there's not a lot of new inventory being built. And so it's the only asset class in the commercial world that has a diminishing supply, which is kind of unique. So there's a massive supply demand imbalance with no new product coming on market, but older product maybe getting redeveloped into other types of properties. But what we have found is that a lot of folks now, given this COVID ordeal that we've gone through, that maybe we're living in an apartment, a C class or B class apartment, which still falls into the affordable workforce housing realm of apartment space. They had a, neighbor above, below, to either side. Maybe they had a balcony, maybe not, right? They're kind of cooped up in the space, are now opening their eyes up to the option of manufactured housing for the same price or less. Now they can literally have their own house. They can, they have a little bit of yard space. They have their own parking pad for their home. What have you. And so our space has literally seen an increase in demand, not just from residents, but also investors. I mean, from both sides of the equation as a result of this COVID crisis. So. Yeah,
no, I hear you on that. I want to talk about cash flow for a minute, because, that's that's a big focus of yours. I was in real estate for many, many years, and, there's, a 10-year IRR, which if you're in real estate, people who are listening understand what that is. And, there's investors that look for cash flow, and there's investors that look for appreciation, and some, balance of those. And so in today's market, what is acceptable? What are investors? What type of cash flow percentage are investors looking for today? Because I think if somebody's listening to this right now, and I'm not going to hold you to a number, you give a range.
No, fair enough.
It changes because it changes by the day and the week and the economy and the market. But I think if somebody's listening to this right now, or if there is an investor listening to this now, they're probably thinking, well, what type of, cash flow do Kevin's properties, spin off? And so, speak to that a little bit.
Yeah, and I try not to be so specific. I like to speak in a little bit more of a generalized manner, so that we can kind of hit the philosophy of residents. And
Kevin, I just want to say, I'm giving you the pass to sound like a politician.
Yeah.
You can
answer. No, and I'll answer what it is we look for, but I want to make sure that we actually hit the wide range of what folks need to be thinking about and how they kind of place themselves in a because I think there's different categories of investors and there's also different categories of investments. And so, there's this, risk reward spectrum. The higher the risk, you expect a higher reward. The lower the risk, the lower reward, and that equates to returns, higher or lower returns. And so we do a wide variety of different types of projects. So in the manufactured housing space, on the one side of the spectrum, we'll go into a manufactured housing community that's been distressed. Maybe current ownership just has neglected over the years. It's in a great location, great school district, but it's less than desirable. I'll leave it at that. And we're really good at going in and getting out the bad, cleaning up the place, injecting a lot of capital into it and making it into a place that people are proud of. And, in turn, we attract the people that want to live there. They want to send their kids to the best public schools, what have you. And so that is a value add project like that is a little bit more risky, right? Because there's a business plan. However, it has not been executed. It's not stabilized. And so a park like that, an investor might expect, somewhere in the range of a 12 to maybe a 16% annualized cash on cash return once the property stabilized, right? But they took a little bit more risk on the front end. And I'm speaking to the manufactured housing space.
Absolutely.
And then on the other side of that spectrum is something that is a very stabilized community. I use Florida as an example. That's where I'm based out of. There's lots of 55 plus age restricted, I like to call them lifestyle communities down here in Florida. They're not really affordable housing. A lot of them are second homes for snowbirds. They're on pensions. They've got fixed incomes. I mean, there's not a lot of risk associated with the demographic that's living there. Of can they pay the rent? Can they not? And so those assets trade on a much lower return basis. In fact, commonly we'll see them trade at a 5 cap rate or even lower than that. And so you're talking about your annualized cash returns are still single digits. I mean, they're very low, but it's very low risk as well. And so and how you need to determine of what you're comfortable with or where you're at, in this world, as far as like, I'm an investor, who am I, what am I seeking, is I found that there's the folks they still need to make it, right? They've got some money to invest, but they need to multiply that money, right? So they're willing to take some more risk. Maybe they're in their 30s or 40s and they've got some time left, but they don't have a lot of time. They want to make their mark, and they need to take some more risk to make that mark and hit those double-digit returns. And on the other side of the spectrum, you've got the wealth preservation folks. They've made the money. They've put in the risky investments over the years. They've done really well for themselves. They just don't want to lose it now. They don't even necessarily make more. They just don't want to lose what they've already made. And so they're in the wealth preservation mode. They're the ones that would be more akin to maybe that stabilized 55 plus community in Florida. Low returns, but very low risk, right? It's just kind of an annuity. Just let it roll on. And then the guy that's getting started needs to multiply his wealth a lot faster. He might be more the value add. And then there's, a lot of folks that fall right in the middle of that camp. And so,
that was a great description, because that was a hard question and it was a great description. And I just want to highlight a couple of things, whether you're, high risk, high reward, low risk, low reward. I think it's really important. And I see this sometimes. I saw this when I was in real estate, people wanting to get into real estate, but it not being their full-time job. So they don't have the eyes and the ears to see and hear kind of the potential issues. Because I think a lot of times people think that buying a real estate deal is very easy, right? You put it under contract, you close the deal. When really it's a very complicated continuum that can take anywhere between 6 and 12 to 18 plus months to close a transaction once you buy it. And you really need to, if you're not doing it full time and you want to invest in it, in my opinion, it's always best to align yourself with people who have track record, who have an understanding of a specific niche product type, who can look at a deal that may look great to you, but you can see all the holes and the gaps in it. So I think that's important to work with experts like you to if people want a higher probability of it actually being a return.
Yeah, no, and that's a beautiful thing about where we're at in today's world is there's been a lot of changes, with the Securities and Trade Commission during Obama's administration that now allow, what only used to be made available to the country club folks, right? Those that had a network that already had the wealthy folks they were rubbing elbows with, their buddies, their coworkers, associates, what have you. Now those types of investment that country club folks were doing, it's available really to the entire world now in different formats. And so, for example, like we specialize in the manufactured housing space. That's our core competency. That's our lane that we go down on a daily basis. However, I personally have a number of passive investments with other operators and other asset classes. I really like self-storage. I do have some retail investments I've had for years. I have some office investments as well. And those are with different operators that specialize in those different asset classes, but I'm not active. I don't have to wake up every day living and breathing what they do. That's what they do best, right? I just give them money to go, get a return on it for me. And we do the same thing for investors in the manufactured housing space.
Yeah, it's smart. I mean, you understand the power of just aligning yourself with the right people. So I think that's great. Before we move into a quick speed round, Kevin, tell people, just give them a deeper, quick summary of your company, who your ideal clients are, and how they can connect with you.
Yeah, no, absolutely. And so our company name is Sunrise Capital Investors. You can find us at sunrisecapitalinvestors.com. But we're a private boutique real estate investment firm that specializes in the manufactured housing space. We currently own communities in 13 different states, currently actively buying today. We work with accredited investors, so high net worth accredited investors that are seeking to seeking to place their money into an alternate type investment. And so if you meet the accreditation status and you're looking for an alternate investment, you can reach out to us. We can give you kind of the operating memorandum of our product, what it is we do, and our business model as a whole. And that's it, John. That's kind of the little quick elevator pitch.
I love it. I love it. All right. As an entrepreneur, Kevin, of somebody who has their own business, a lot of kids graduated college recently in a totally different world than they thought was going to be back in February. What advice would you give those graduates?
Wow. The difference about the graduates today versus when you and I, John, and I don't know your age, but I think we're probably in the same range.
I'm 48. How are you?
Okay. I'm 41. So still in the same range. But back when we were graduating school, there weren't nearly as many resources out there today with information, education. I mean, you could stay up at 3 o'clock in the morning and find some type of infomercial and buy a product off there, or go to the library. But really, other than that, there weren't podcasts, there weren't audiobooks. I mean, it just there wasn't a litany of resources of free education out there that you can find today. And so I would say that I'm of the mind that you want to find kind of your path, the path that you think you enjoy in life. I mean, I am a firm believer that the money will come. If you truly do what you enjoy doing, the money will come. I know some people don't believe that way, but I do.
I'm on that page.
And I think that you need to, spend your time, touching a bunch of different areas. I mean, the resources are there, right? If you want to be in business, I mean, go ahead and dive deep into the many different podcasts, read as many books as you can on different business types. Maybe it's international business, maybe it's domestic, what have you. Maybe there's specific niches that you have an interest in, but taste all the flavors, right? Do it now. Spend the time doing it now so that you can have a better direction and better focus as you move forward in life. I mean, those resources weren't there 20 years ago, but they're there today. So take advantage of them and don't take them for granted. Yeah.
And one thing I remember hearing in my 20s, somebody said this to me: your 20s are for learning, your 30s are for earning. So soak up as much as you can in your 20s.
Yeah.
In your 20s, you can get away with doing something wrong. In your 30s, you can't as much, right?
Yeah.
You're kind of right.
And I think there's one more layer to that as well, is once you figure out what you think you want to do, and that could change, right? I mean, what you think you want to do in your 20s, ultimately you're going to take different directions in life, and that's okay, right? It's to be expected. But once you figure out what you think you want to do, go find someone that's been there and done it. Go find someone that's actually mastered that, and find out how to add value to them. Maybe they become your mentor, maybe not, but find out how to add value to them so that you can extract, all the lessons that they've learned over the years to get to where they're at, which is probably, leap years ahead of where you're currently at in that space.
Yeah. Amen to that. Mentorship is absolutely critical. Favorite book and why?
Yeah. I Think and Grow Rich. It was probably the first business book that, I don't know if you can classify it as a business book, but it was the first business book that really got me thinking very differently in my early 20s about money and just about the power of visualization and, it's just I literally read it once a year. I go back and reflect on it once a year. Maybe not read it page by page, but I go back to different sections I've highlighted over the years, and I've got multiple different copies of it, and I've probably handed out more copies of that book than any other book to associates, staff, friends, family, what have you.
Yeah, I love that book. I've read it multiple times. A book I'm reading right now for like the 7th time is The 4 Agreements. You ever read that one?
No, I've not.
You'd love it. It's one of my favorite books. Check it out, The 4 Agreements.
Okay.
You're going to love it. Best piece of wisdom you ever received?
Yeah, find a mentor.
Yeah.
Literally, from my original mentor. And I didn't know I needed a mentor when I was 19, but ultimately, he was he only, was my mentor for a few years. I mean, we're still friends today, but I moved away and he wasn't there. But I mean, that piece of advice was like, hey, I got you started. You need to go find someone that can take you to the next level. I can't, and you're not going to do it by yourself. Go find a mentor.
Yeah. Amen to that. And then finish the sentence. Last question. The one thing people need to do to finish 2020 strong is
focus. Turn off the damn TV.
Yeah, right. There's not much to watch anyway.
And I just started taking my own advice like a month and a half ago. I had to. I mean, I don't even watch TV, but I got sucked into March and April, paying attention to this coronavirus, and now you just realize that really the virus, for the most part, it's real. But I mean, the virus for the most part is the media. So turn off the damn news. It's not going to be helpful at all.
Totally watch it, right? I sometimes will go a day or two without watching it because it's just like I don't have the capacity. It's like it puts me in a bad mood. So You got to take it in doses. Kevin, tell everybody one more time how to get a hold of you.
Yeah. So company-wise, you can go to our website, sunrisecapitalinvestors.com. If you want to learn about me and listen to the podcast that I do on a weekly basis, you can go to kevinbupp.com.
I love it. I love it. Kevin, this was great. I appreciate it. You get to, you add to my list of, like a mini master's class that I learned today. I loved what you had to share. And I love most of all, I think the mission of affordable housing to deserving families encompasses, the foundation of everything that you've talked about today and the heart of your business and who you are as an individual. I appreciate you taking time to share your thoughts and wisdom, and to think community who's listening, thank you very much. If Kevin can help you, reach out to him and give him a buzz. Thanks, man.
All right. Thanks, John. Appreciate it, bud.
Hold on 2 seconds.